When we look at markets, we're so used to seeing just numbers and charts. But what if the single most powerful economic force can't even be plotted on a spreadsheet? Today, we are diving into confidence. And I don't mean it as just some fuzzy emotion, but as the invisible currency that truly, truly governs the rise and fall of fortunes and even entire nations. And this quote it gets right to the heart of it all. Confidence isn't loud, it's not flashy. It's this silent, almost invisible force that dictates where capital flows and, just as importantly, where it flees. It's the absolute bedrock of our entire economic system. Okay, take a look at this. It breaks the concept down beautifully. Confidence is really like a thread that connects what we do today with the outcomes we expect tomorrow. And that thread is woven from our actions, our experiences, and, let's be honest, the stories we tell ourselves. Now, when that thread is strong, institutions thrive. But when it starts to fray, well, that's when everything begins to wobble.
So where do we place this all-important trust? This brings us to a central battleground for our confidence. This perpetual tug-of-war between public institutions and private ones.
Here's the core difference, right? Public institutions, they run on faith. We believe in their promise of fairness and stability. Private institutions, on the other hand, they run on performance. We judge them by the results they deliver. Now, both need our confidence to survive, but they earn it or lose it in completely different ways.
Think about it like a long dinner party. Early on, everyone loves the host. That's the public sector. The stimulus is flowing, things are feeling good. But as the night wears on, the debt starts to pile up. That bill gets bigger and bigger. And, quietly, guests start looking around for the exit. And that exit? It's often the private sector, where tangible results start to look a whole lot more appealing than just promises.
So how does this shift in confidence actually happen? Well, it's not random. It follows a predictable cycle where our collective beliefs literally become our economic reality.
This feedback loop is the engine that drives the whole thing. A few bad economic numbers come out and we all start to get a little nervous. So what happens? Businesses stop hiring. Consumers stop spending. And that very caution creates the exact slowdown we were afraid of, proving our initial worries were right all along. It's a self-fulfilling prophecy, and boy, does it write its own script.
And you know what? Psychology actually has a name for this. It's called the Pygmalion effect. Our expectations literally create our reality. If we expect an economy to fail, our collective actions can absolutely make that happen. But conversely, if we believe in a market, it tends to rise to the occasion. Our collective mindset is an incredibly powerful driver of real-world outcomes.
The crucial point here, the big takeaway, is that this isn't just chaos. For a trained eye, there's a clear pattern underneath it all. Understanding this pattern is the key, which brings us to frameworks like the one developed by Martin Armstrong. He designed his work to find the rhythm beneath all the noise.
So what Armstrong's model does is it maps these great migrations of capital. It helps you visualize these long, multi-decade waves where confidence, and of course money, flows from the public sector to the private sector and then eventually back again. When trust in government is high, capital tends to favor public assets like bonds. But when that trust erodes, it goes looking for a safe harbor, and that's usually in private enterprise.
Okay, so that's the model. Super interesting, right? But how does this actually apply to us right now? Let's take this from theory and put it straight into the real world of investing today.
This map right here visualizes that global flow of confidence perfectly. You see, capital is a very savvy guest. It doesn't wait around for the fire alarm to go off. It smells the smoke of instability, whether it's political or economic, and it moves on, always seeking safer shores.
And where does it go? Well, very often, it flows to the U.S. Not because the U.S. is perfect, far from it, but because in a world full of uncertainty, it's often seen as the cleanest shirt in the dirty laundry. Capital doesn't demand perfection. What it seeks is relative safety, liquidity, and the rule of law.
So, what does this massive shift mean for your portfolio? The signals point to a few key strategies. First, with trust in public institutions getting shaky, physical assets like gold and silver become really valuable hedges. Long-term government bonds, they become a lot riskier. It's like a long-dated promise from a source you're not so sure about anymore. Meanwhile, shorter-term corporate debt looks more attractive. And overall, it is just smart to prepare for a much bumpier ride, because this kind of transition always creates uncertainty.
Okay, so let's bring it all home. How do you gain an edge in this kind of environment? It's not about having a better algorithm or faster computer. The real advantage lies in something much, much more fundamental.
The real wisdom here is to stop chasing the daily headlines and instead to understand the deeper currents. You have to study the timing and the rhythm of confidence, because that is what shapes markets long before it ever becomes front-page news.
Your edge is awareness. Plain and simple, it's about watching not just the numbers, but the conduct of people. It's about listening to the stories that are guiding the flow of capital. Because at the end of the day, markets are governed by belief, and when that belief shifts, everything else follows.
So I'll leave you with one final, and I think crucial, question. As this great migration of trust continues on its journey, is your portfolio positioned to actually follow the flow, or is it at risk of being left behind?
If you want to dive deeper into this way of thinking and learn how to apply it, you can connect directly with the Macro Butler. Feel free to reach out at info@themacrobutler.com or just visit the website. Thanks for watching.